Mortgage stress. What is it? How do you identify it? And how would you know how to get out of it should you be in there? It's a really interesting and topical comment at the moment, mortgage stress. It's interesting, there actually is no definition of mortgage stress. There's no such thing. It's just something that some commentators or the market has determined. So with mortgage stress, it's largely been by market commentators and people around the circles as representing 30% of your gross household income. So that's the income before your tax comes out. I don't know that 30% actually is a true reflection. I would suggest in modern times that it's somewhere between 40 and 50%, which has been where the lenders have been willing to lend you of recent times, especially with markets growing. One of the reasons for mortgage stress is probably given we've had a really low period of wages growth, and that could be one reason that's impacting. A recent survey found that around 29% of our households are currently at risk or experiencing mortgage stress. So that's where over 30% of their incomes are being dedicated to mortgage repayments. That, when we delve in a little bit further, actually means that there's around 51,000 households across Australia that could be at risk of mortgage stress. So what are some of the signs of mortgage stress and what can we do about it? Some of the signs of mortgage stress. Firstly, I think if you're struggling at the end of the week, fortnight or month to have enough money just to meet your normal commitments, there's probably a little bit of stress there. If your credit card or other personal debts at the end of the month is higher than what it was at the start of the month, or you might be struggling to meet that minimum repayment, not the full repayment, there's probably some stress there. If you're struggling, that utility bill or the car registration comes in and you don't have enough money to pay it, or there's going to put some more stress on, then that's probably a sign. And definitely if you've missed a repayment or the day or two just before your mortgage repayment is due, you're struggling to have enough cash together, there's probably some signs of mortgage stress there. Why is mortgage stress so important and why should we be doing something about it? Well, it can lead to defaults, it can lead to arrears, and it could put your home at risk. So what can we do about it? Well, I think the first thing that is really important to allay the fears of mortgage stress is have a budget. Sadly, in Australia, we see way too many people that don't have a proper budget. They have no idea what it costs them to live. They often spend more than they actually earn, and this puts then undue pressure on them. They like or want the new shiny car, they want to upgrade their home, they have aspirations, and that's all fine. We encourage that, but there needs to be balanced. You don't want to do something that's going to put you at risk. So please do a budget. If you don't have one, we can help you or give you some budgeting tools that at least give you an idea of what it is. Once you can identify exactly what your expenditure is, I think it allows you a better opportunity to allay the fears of mortgage stress and long-term mortgage default. Secondly, we can also do some pricing and try and seek a lower interest rate, look to refinance it or get you out of the short-term bubble that you might be in. They're things that a professional broker or your bank can help with. There's other things. If we've got short-term job loss and things like that, lenders will actually work with you. They'll give you what they call a holiday from your repayments. You have to catch them up, but they'll actually work with you because at the end of the day, no one wants to see people removed from their homes. But you've got to identify it early and you've got to be quick to act. So budgeting and working on those little telltale signs are really important, because when you work to mortgage default, that's often when a number of reasons have eventuated. It'll be the loss of a job. It'll be a divorce, a significant change in your personal situation, or it'll be a death in the family. These things, if you're struggling to meet your budgets, if you're struggling with some mortgage stress and one of those events happen, that's the three clear signs of when people go into mortgage default, and we don't want to get you there. So I hope that gives you a little bit of information about mortgage stress. If anyone is out there struggling with their repayments or identifying some of the signs, please, we'd love to hear from you and try and give you a hand to work through it.